Okay, what do you expect the central bank to do at this stage, particularly in light of what we've heard from the president just in the last 24 hours about his signalling?
This is a very bad time for there to be uncertainty over Turkish monetary policy. Obviously, we've got a lot of pressure on certain currencies within EM, and that's partly, of course, coming or mainly coming from events in the US. So it is putting pressure on Turkey. We suspect that they may be forced to raise interest rates just to try to protect the lira. But I think one has to put this in global context as well. And if global conditions at some point start to improve, some of that pressure will come off Turkey. So for Turkey at the moment, it's a bit of a perfect storm, unfortunately.
How do you view Turkey more broadly then, as you said? I mean, we kind of allude to this as a deficit country. Clearly, the external financing vulnerabilities that it has, particularly in a US raising rate environment or even a dollar strength environment, makes it relatively vulnerable. But more broadly, what do you think of the story here?
Basically, we think Turkey's got some of the worst fundamentals within emerging market equities, within the index that, I cover. As your correspondent said, you've got a big current account deficit, which has been widening. You've got it financed by short-term capital flows, not long-term flows. And you've got a lot of uncertainty about monetary policy. In fact, real rates are just too low in Turkey. And this represents one of the challenges. So what happens is that when conditions globally are good, everybody pours into Turkey because the market is cheap. The economy is doing relatively well, although probably slowing down a little bit now. But as soon as the tide flows out, as they say, Turkey is seen to be the one with the weakest fundamentals. And so I think you have to put this confusion over monetary policy in context of what has been a fairly challenging global environment recently. But for us, Turkey is a market to avoid. We're underweight the equity market there.
So, Gene, let's talk about that broader market, not just Turkey, but emerging markets generally. I'll put a chart up here, actually, that shows what's going on with emerging market currencies overall, the gauge, and it really is testing the 200-day daily moving average at this point. What is going on with emerging markets? Is this a longer-term challenge for them?
I mean, I would say that Turkey and Argentina are kind of special. I would say that they're more victims of self-inflicted wounds, whereas with the rest of the asset class, it has been an unusual year in that there are a confluence of idiosyncratic risks that seem to be hitting, all in tandem at a time when you've just had the sharpest tightening in U.S. financial conditions in 7 years. The latter tends to create some indigestion, some natural indigestion, in an environment where I would say asset prices in emerging markets are certainly not expensive, and in currency space in particular look reasonably cheap. Does it create some challenges? Yes, definitely. I think it does put some constraints on their ability to ease policies to support growth, and that's probably the strongest impact. There's also some natural contagion from these worse credits onto the better credits, which we actually think is a good thing because it gives us an opportunity to take advantage of what we think are dislocations on relatively cheap assets.